Hey guys, how's it going? It's Rob here from Precision Markets. I'd like to break down a trade for you guys that I took on Friday. Now, if you already haven't, definitely subscribe to this channel as there will be more content coming your guys' way. So I get to the chart around 4:30, 4:45 in the morning. Not the greatest time zone for trading, but I'm just going to walk you guys through my New York session and what I've seen as probable setups and what are areas of interest to me. So first we're going to pull some points of interest to me that stand out. So I get these points that stand out. These are just imbalance, nothing crazy. And pull my lit zones. So these are about the points of interest that we are willing to transact at. So anything, if I count this as my high and this is my low, anything above the halfway point is a sell. Anything below it constitutes a buy. To sell, we need liquidity. To buy, we need liquidity. The London momentum is obviously bullish. We took previous day's low here to fuel it. And we actually took previous months in here to the left as well. So we definitely have liquidity to go to the upside. And I'm actually looking for a retracement on the daily, which is around here somewhere, which we may get on Monday. So if this is my high, this is my low, this is kind of the equilibrium I'm seeking out come Monday. So we'll see if we get it. Anyway, so I was willing to sell from a couple areas and I'm willing to buy from a couple areas. So now if we go down to a micro time frame, we need to identify some liquidity points. Right away, the first thing that stands up to me is this buildup. That is liquidity to be run, buildup, liquidity to be run. If you look at this particular buildup here, it is in line with the New York high, which is our medium inducement. This buildup here is actually in line with what took out the Frankfurt high. So we can assume some kind of transfer happened here. The next thing that stands out to me is equilibrium on this particular drive was not achieved. So I get another point of interest here. And we'll make that one blue. That's just equilibrium. Where is it? Okay. All right, guys. So, price just kind of went along here. So these are our targets, guys. We don't have the liquidity to sell, so there is no sell to be had. The buy, I'm willing to buy. I'm not willing to buy from where it is because this is build up. You can ride build up. The problem with riding build up is I always like to have fresh liquidity within my sessions and timings to push me up. So in this case, I don't have it. So within my timings, I need fresh liquidity provided in the next 20 minutes here, which I don't get. So I wouldn't chase this. So I get to the chart around here. This would be a horrible place to buy. I wouldn't do it. It's poorly priced. All right. So this is actually the first sell of the day. I kind of feel silly for this one. I didn't take this sell because of the size of this bearish reaction, but we hit our liquidity induced trap. We filled this imbalance. And yeah, like I said, guys, I kind of feel silly for this one, but this was the first sell of the day. I didn't take this. I took the buy, which I'm going to show you. And you could have easily targeted this build up. So it would have been a nice 8R, but yeah, it wasn't even that. No, it wasn't even a big stop. I think I just told myself it was. Anyway, I didn't take that. So now we just wait for, so one of two things has to happen here. If price tests the initial reaction, 50% of this reaction, you can take it, which in this case it doesn't do. Now we create another liquidity induced trap here. So if price gets a run on that, that would be a sell scenario as well, which we do not get. This literally gave you one entry opportunity, and that was the bearish candle that I decided was too big, which it was not. I think what I actually had on my chart at the time, I think I had something along the lines of this, where the candles were stretched too much. And I was like, oh, that's too big. In reality, the candle wasn't too big. Like if I knew it was only 4 pips, I probably would have taken that. I think in my mind, I thought that was like a 7 pip stop or something, and it wasn't worth taking with the travel distance I had. Anyway, long story short, I did not get into that trade. We do have the Powell speech coming up at 8 o'clock. So let's talk about the way liquidity distributes and how price develops here. So as we said earlier, we have our liquidity induced trap, we have the imbalance, we have the session high here. We get a run on it. These 3 points are a catalyst for a sell. Alternatively, the secondary of interest would have been the London high or this imbalance up here, which we didn't get in this day. So now this buildup is the target. So price kind of goes along. Now I want you to pay attention to how price is behaving. This is, again, developing buildup. There is nothing wrong with if you wanted to take this build up. However, you always have to keep in mind of not wanting to become part of liquidity. From a pricing perspective on this drive, buying down or selling down here would be a horrible move. I'd be willing to sell from up here, and I would be willing to sell from up here. Aside from that, sells are invalidated for me. So here we continue riding the build up. All right, so this first reaction hits a point of interest. I'm going to be honest with you guys. I took this buy after reviewing PA. This was almost not a good setup, and I'm going to tell you why. So the good thing about it here, is we tap the liquidity induced trap. We create the inducement. We take out the first buyers here with this wick. And so I took this on this candle, which is probably the same size as the sell candle. And for whatever reason, I decided this was not too big. So literally the same size stop. I think at this point I had squished my screen when I realized what I did. So this here was my first buy. And like I said to you guys, this is actually a silly buy. And I'm going to show you why. The reason I consider this a silly buy is this is actually, if we actually break down the 5 minute, which is the finer details, this is actually the point I needed to hit in order to even start considering a buy, because that is the lit zone on our 5 minute. And ultimately, you could say the sell to buy in these wicks is part of this buildup, which you can see really cleanly on the 1 minute. So our buildup actually starts here, meaning that the fine-tunement should have told me that we weren't even looking for a buy till here. So we're going to call this a silly buy. That one shouldn't have happened. Still creating build up. Nothing's really been run. We're respecting the highs. All right, so we vector candled into the setup. This is a proper buy setup. So this should be the first buy. Now let's just see how it goes. So I believe what I did on this guy was I waited for these two candles. So this first bullish candle was not sufficient enough because the size, the wick we had to the upside. So what I did was I put a stop on this and just bring it back a bit, put a limit on it. So this should have been my first buy. Targets are obviously the inducement high. This is an inducement high. It got formed very poorly. The way this formed, it is a target. It will not hold. You will never want to take a sell off that. In this case, we use news to drive through it. However, we do not need news for that. So, this is the second buy I took, and this one was part of the plan. This was a good buy. Right around here somewhere, we do get Powell starting to talk, and there's another guy talking to him. I was listening to the speech. At first, they committed to continue raising rates to stop inflation, which actually, fundamentally speaking, should drive price down, which is where we get this little spike here when Powell mentions this. And all price really did here was essentially drive us down further to balance this leg, which we marked out earlier. So this is my highest probability buy. So stupid loss, valid loss, and now we're at what I consider a high probability area. This isn't enough to take it. I want to see a full-bodied candle. So we test the initial reaction, we don't run it, and this is where the speech turns around. And what they actually did was they started out with this speech inducing people into sells, because they said they were basically talking about raising rates, and that should have ultimately drove this down more. However, the way price distributed here, paired with our momentum and paired with looking for daily equilibrium and taking out this weak high, this is a grade A setup for me. It got there really quick. So even the fundamentals induced people into sells. So everyone here would have started selling based on what Powell said. And this is where they started talking about how Powell basically said the US banks are doing really good and he's not worried about it. And this is exactly where the market reacted to what he said and didn't buy it. And the market basically did this in a matter of minutes as soon as Powell said he wasn't worried about the banks. So that was basically the market being like, okay, you said you're not worried about the banks, which means you are worried about the banks, but the fundamentals alone could have fooled you here. So we really had to break down how liquidity was stacked. I know some people would have tried selling from here in continuation with your 4-hour trend. This is a weak high. You don't want to sell off this point. How we tell this is a weak high is how it formed. It got formed really quick. Look at the size of that wick. Generally, when you get a candle like that, you get 2 to 5 candles in that direction and price will reverse. So in our case, we got the rejection candle, 2 more candles came into our area of interest. So we're willing to buy from here. We were willing to buy from running the London lows. And we assumed the buying pressure was going to continue for the higher time frame rebalance. So this is like I said, grade A setup. It could have been a better day if I didn't hesitate on my sell and if I didn't take the first buy, which actually didn't meet the plan when I broke it down after, but that's okay. It was still a really good day overall. But this is very systematic. The news themselves, not all news are tradable. And what I mean by that is if I wasn't sure if I should buy or sell, or I had like 7 areas of interest and nothing below was balanced, nothing above was balanced, I wouldn't trade news. In this case, if we take a look at the 1 hour, all these ranges are balanced. Price really doesn't need to come down. So we assume the momentum of this reaction will continue. And the first probable area is this week high. So it's exactly what price did. To further confirm that, we've seen how liquidity was stacked prior to the news, this buildup, which automatically becomes the target. A lot of people close their trades here. You don't need to. Like when you see a high form like this and you have momentum in the intermediate part of the session, this becomes the target. So very systematic trade, very simple trade, nothing to it. Just like the sell was very simple. Unfortunately, it did not give us any entry opportunities to get in. I believe this buy was no different. If you didn't get in where I got in, you basically missed the move. It hit TP in, I don't know, 10 minutes, not even. So that was Friday's trade. I hope you guys enjoyed this video. And yeah, like I said, definitely subscribe. There will be more. And I hope you guys have a great day.